Hello traders, I trust you're all well and ready for this coming week. So I'd like to show you guys my strategy. So I'm revealing my strategy today, the strategy that I always analyze with. Usually you don't catch the strategy, the full version of the strategy. You just get to understand how I come prepared and have already analyzed the charts, and then I just show you where my anticipations are and then what I'm looking at. But currently I'll show you my strategy on GBP USD. So my strategy is top down bottom up strategy, meaning I'm analyzing the market from the higher time frame to the smaller time frame. Top down bottom up strategy. So first things first, you go to the monthly chart because it's the highest chart on the list. Okay, monthly chart. Then you plot your horizontal line. You count. This is the current month of May. You count 5 months back, meaning 1 2 3 4 5. Then you place your candlestick 2 4 5. Sorry, you place your horizontal line. If the market is going up, you place the horizontal line on the low of the candlestick. If it's going down, you place it on the high of the candlestick. From here we jump to the weekly chart. On the weekly, we place another horizontal on the previous 5 days, 5 weeks back. So this current week, it was the week for this week. It's currently closing. So you start counting from it. 1 2 3 4 5. We place it at the high. Since the market is on a short-term downtrend, it just changed direction and got into the sell territory. So hence I'm putting it up there. So currently you can already see this is a clean chart. You can already see what's happening. I'll let you know about the moving averages. From here, you jump to the daily chart. On the daily chart, same thing, horizontal line, but on this one you plot let me see, 1 2 3 4 5. On this one as well, you plot 5 days back. This candlestick was on the Friday candlestick, so we count from it 1 2 3 4 5. Then you place this horizontal line, sorry about that, the horizontal line at the high of the candlestick, since price is dropping. From here you can just speculate and look at the charts nakedly. So you can look at the charts. You can see that we have a pattern that was actually failing to go to the upside. Then you take your Fibonacci retracement, testing whether the market is still good to go to the upside or to the downside, the levels of the market. So you do this when you place horizontal. You place it from the high of the trend to the low. So I'll use this low to the low of the trend. This is the Fibonacci retracement tool. So I've just placed my Fibonacci retracement on the daily time frame. So I want to show you on the 4-hour how it works. So on the 4-hour, you can see the daily time frame. So the higher the time frame, guys, the accurate the horizontal line, the accurate the supply and demand compared to the smaller time frames, because the market moves in patterns. The market moves in patterns, and it creates certain zones from the previous pattern. So you find that on the monthly, you find that price could one day come here, and then we could understand the previous 2022 data compared to the 2023 data. So the higher time frame, the more accurate the setup is, or the analysis. So I'm on the 4-hour time frame now. So if you can take a look with my strategy at the 100%, when the price breaks out of 100%, that's when you start to enter. When price breaks the 50%, it's confirming that it's going to continue up until the 0%. You understand what I'm saying? So if price, let's say for instance, price was there at the 100% Fibonacci retracement level, it pulled back from there and it was currently at 61.8%. Broke 61.8, came to 50% and broke out of the 50%. So when price breaks out of the 50% retracement level, it shows that it is going to continue and finish and complete the trend until 100%. You understand? So if price breaks out of the 50%, stop buying, or vice versa. It will continue to complete the trend. You understand? So with my strategy, technically I start to enter buy positions at the breakout of 100%, or just positions as well as the breakout of 0%. Also, the breakout at 50%. If I get a breakout of 50%, I start seeing a breakout 50%, checking out the news that they are negative, and then I just put my stop loss there and I sell. You see, if I took a sell from here, my stop loss just above 61.8, even the Fibonacci retracement acts as a level of stop loss where you can put your stop loss at. So price broke out of this 50%, I immediately came and took a sell or set a sell stop, took a sell, stop loss just above 61.8, and then price impulsed, pulled back, testing the previous breakout, then dropped. Currently you could be holding profits where your take profit could be at the 0%. You understand? From there we could see price starting to consolidate, then possibly a breakout and continuing with the trend. So guys, remember, when you start to take positions, when the price break out of the 100%, in between here you don't take positions unless it's on the 50%. So in other cases, price could be coming from the downside going up, so you could get a price impulsing breaking the 50%. So if it breaks 50%, take your buy, stop loss just below 38.2, and then target the 100%. You understand? Or what I always do is that as I took the sell here, as price moves to the downside, I will adjust my stop loss, take my stop loss, put it here. As it moves, take my stop loss, put it here. And if it is near to reaching my TP, I will take my TP and just stretch it to the next possible target and just place my take stop loss there as price moves. You understand? So let's continue with the analysis. I hope you understand currently how my strategies is working, how I am able to like get signals, even technical signals. So on the 1 hour, okay, let's go to the 4 hour. So on the 4 hour, then you come and then you place your supply zones. So you place your supply zones on the most respected zone, as well as your demand zone. So currently the supply zone that I can see it was mostly respected is here. It was one of one of the strong supply zones. This one up here as well. And then now I'm looking for the demand zone. So for me, guys, I love the 4 hour time frame. It's clear. It just needs patience. Just need to be patient when you're using the 4 hour time frame. But then you take your positions or your orders at the smaller time frames, the 1 hour. So this is the strategy now coming together, guys. I hope it's clear. I hope the strategy is clear, guys. So the moving averages, you go log in just the moving average. Now you set your moving averages at the functions. You go to the functions and go on the moving average, open 2 folders. The first folder you set it at 350. This moving average, the green one is 350 day moving average. You set it to green, it acts as a support. And the red one is the 200 day moving average. Set it red, it acts as a resistance. So when price reaches this 200 day moving average and breaks it, it acts as a resistance. So we anticipate that price will continue to drop. So if you were to take positions now, if you were to want to execute, you will wait for price to break out of the zone. Already we are confirming that the market is in a sell territory, considering from the breakout of the 50%. We're looking to break the 0%, completing the trend. So this is a signal of that the market will going to continue selling. Is a resistance. The moving average acts as a resistance. But now you don't just enter because anything can happen. This is a strong demand zone. There were buyers coming in the previous time, buyers taking price to the upside. So now you don't just come in here. You will wait for price to break out of the 0%. Then you can start to take your orders. You can take sells, pull back, stop loss just above there, and target the next possible zone. The next possible zone could be at the next possible take profit could be at 1.23528. So guys, this is the strategy. Furthermore, you can just set the trend lines. Let me do this quickly. 2 pixels white. That's not white. This is white. Okay. Further, you can just set your trend lines, but I don't like too much of trend lines. Trend lines is I use it to anticipate where the trend is headed. You understand where the trend is heading. It's not a strategy that when price comes to the trend line, now we get a second touch, third touch on the trend line, and then I'm buying. No, it doesn't work. It doesn't work. It doesn't work. It does not work. So let me measure this together and then show you the strategy. So I can at least have this one horizontal line, this trend line. So you can see price respected here, respected the zone, respecting even the demand zone. Also showing the trend line shows that price is on an uptrend. It just showed the trend of the price. So sellers came in there and they currently take profits, and then we're having a demand zone. So traders, how you set, if you set your trend line, you don't just place it. You need to look at the wicks. This thin lines here, they are known as wicks. So you place your first trend line to the week to week, or just measure it accordingly. That's the thing I don't like about trend line. It's not accurate as the supply and demand zone. You understand? I just use it to anticipate the trend. So someone could be buying when price comes here, but sometimes price could break. You see, now you try to buy because price respected the trend line, and then it broke and hit your stop loss. So if you bought here on the demand zone, you just put your stop loss there, price respects that. So supply and demand is a good strategy to use. And then the next trend line, you use it with, you measure it according to this, the candlestick body to candlestick body. You see the trend line is moving into the body of the candlestick, as well as here is moving into the body, so it makes it irrelevant. That's what I learned from my mentors. So I hope you are together, guys. So price, as price breaks out of the demand zone, it changes into a supply zone. It's no longer a demand zone, it changes into a resistance, because now price is supporting. You see, it hasn't broken out of the demand zone, it's supporting. It's also a support zone / demand zone, but supply and demand is a matter of economics. Resistance and support is a matter of trading the financial markets. But you'll understand, you need to understand how to differentiate the two. But you know what I mean. You understand it, guys. As long as you understand supply and demand, you understand support and resistance. So this is support. So then the trend will be completed right after it break out of this. So what you can look at as well, you get stages in the market. You see, for instance, let's just take this impulse. You have an impulse, correction, continuation. So this impulse, guys, okay, I could say this area this area is a correction, the whole of this area, because price was chopping into the market. When it broke out, it gave us a big spike. You see the spike. So this market moves in 3 stages. So you have the correction or consolidation phase, or they call it what, contraction, if I'm not mistaken. Then we get a impulse. There will always be a consolidation, then an impulse. From there we have a correction again, and then an impulse. So this impulse is a first stage, this correction is a second phase, that this impulse that is continuing is the third phase. So the market moves in 3 phases. So after the market, currently after it hits the 0%, the market is starting a new trend, a new phase. Then we'll see it consolidate. That will be the first stage. We'll see the impulse. That will be the second. We'll see it consolidate. That will be the third. You understand? That will be the third. Actually, the third will be the impulse now. So what you can take is that this you see, it's a breakout of the first correction, a breakout, then a correction, first stage, second stage, and then third stage, which is the continuation. So this consolidation, it is said that price from the first impulse, the second correction phase will be 2 times more volatile than the previous one. So this current price, this is just the starting price. So we will see price doing something like this. I hope we are together, guys, and you understand what I'm saying. Let me just change this to white. Okay, white. So after price breaks out of the first leg of the trend, we will see price doing this, correcting, and then from there we'll see price continuing. So it is said this right here, the breakout here, is the first impulse. So the second stage, okay, this is the first stage, the second stage, the third stage. You understand? Or you can say this is the first stage, leave the correction, and this is the second phase of the trend. So it is said that the second phase of the trend is going to be 2 times volatile than the it's going to be 2 times volatile. So the second phase is going to be 2 times volatile compared to the first phase, meaning this price will move. Okay, let me do this. This price will move 2 times the market, 2 times what it moved here. You understand? So I can anticipate something like this. Something like this. The market will complete this trend after it completed the same direction. This impulsive move, doubling it with one run. So price could potentially drop to 1.23469, just anticipating. So this is the strategy, guys. Just make sure you follow the rules. As well, what you do, you must analyze the commitment of traders. A commitment of traders is whereby you understand how many traders are involved in the market. What are institutional investors doing? Are they buying? Are they selling? You understand? Then you execute your orders at the 1 hour time frames or the 15 minutes time frame. So this is the 1 hour. So the breakout of this structure resulted in an impulse. You got to pull back, testing the supply zone, the horizontal zone of the weekly chart. The weekly chart. So currently price, we could take entries there, stop loss just above there, and then impulsing. Since we broke out of the 50%, we know now that we are going to target the 0%. So guys, this is the strategy. I hope you got it. I will start revealing some of my strategies that I use. This is the technical strategy that I use. Cheers.